We start with steps in exchange trade life cycle, our third subtopic under trade life cycle. All of us are aware of that there are three departments: front office, middle office, back office. Let's start with front office. What steps you are seeing in the slide: trade initiation, trade execution, and trade capture. We understand now they are obviously from front office. So in front office, what happens? In front office, what happens is client approaches STO, securities trading officer, or you can say trader, or you can say even sales staff. So client first discusses. Sales staff does not give him tips. All that is not allowed as per regulators, but tells him about the company for trade. Then the order is executed. But before that, client gives consent to STO. Yes, I want to buy or sell. I want to buy or sell. When client gives consent, it is called trade initiation. Trade initiation means client gives consent to STO. Client giving consent, STO will now go to operational staff. Okay, sir, madam, I have an order here. Please punch that on your system. Please punch that on your system. So punching will take place. Yes, definitely. Why not? And when the punching takes place, then the operational staff says it is done. It is done. In investment banking, we call it is executed. This is called trade execution. So the first step is client saying yes. Second step is punching of order. And the third step is order will be checked on the system. Order will be checked on the system by STO. All this is in front office. That yes, the order has been there on RMS, risk management system, and that is called trade capture. So what are the three steps you learn in front office? Client says yes, trade initiation. Operations staff punches the order, trade execution. STO checks the order on the RMS, risk management system, trade capture. Initiation, execution, capture. Trade initiation, trade execution, trade capture. IEC, initiation, execution, capture. You can see here how it can be executed. Client comes to the office face to face, telephone, email, nowadays even WhatsApp, directly online platform. And when the orders are done, these are all execution. Execution can done even online. When we punch our order, it is execution. So initiation to execution to capture. And please remember, these are steps in order. Don't break the order. If somebody asks you in an interview, you say execution, initiation, capture. Wrong. How can you execute without initiating? So first is client says yes, trade initiation, operation staff punches, execution, and STO retrieves, capture. IMS. And what does he check in execution? Obviously in trading book, trade date, trade time, when will we settle T+1, T+2, it's called value date. How is it operated? What is the quantity, which is the security? What is the price? Counterparty code number. Every detail will be there. Every detail will be there. This will be all available. And then the trading system is there. And please remember, when you keep your records clean, they are efficient trading practices. So basically, we discussed front office, trade initiation, trade execution, trade capture. Now we move to middle office. middle office. This is also part of our steps. How many steps were there? Again, I want to just cross check. If I want to understand front office, IEC, trade initiation, trade execution, trade capture. And that's where STO's duty is complete. Now it goes to middle office. Middle office, there are 3 more steps. To start with, first will be legality. To give legality to the transaction, trade enrichment, where all the calculations, all the trade details, all the data will be verified. All the data will be verified. Enrichment gives value to the contract. What will you check in enrichment? What are the cash values? Who is the custodian? How is the transaction reported? How is the payment and shares going to be transfer, clearinghouse? And what are counterparty trade confirmation requirements? So basically, enrichment is nothing but value addition. Enrichment is nothing but value addition. In trade life cycle, it is the 4th step, but in middle office, it is the 1st step. In middle office, it is the 1st step. Front office, we had 3. Middle office, we have 3 more. In the first is trade enrichment, value addition. It can be done for enrichment of trades. You can see here, it's written very clearly. And if we are taking the information, it can be done even manually or automatic. And if it is done information automatically, then it is also called data default. And please remember, data defaulting can be done only if it is automatic. If it is manual, it is not called data defaulting. It is basically enrichment only. This is just a format for your reference. You can go through it. Enrichment, when we talk about, it is always there for value addition, as I told you, legalities. Next step in middle office is trade validation. When we talk about validation, it is nothing but risk management, minimizing the risk, reducing the risk. You are going to service your client timely. You are going to avoid operational risk. You are going to minimize the cost. What is there in trade validation? Components. There is a trading book. There is a trade time. All of us know 9:15 is the trade time, starts in BSE and NSE. 3:30 it ends. 7:30 p.m. Indian Standard Time for US and 1:30 a.m. it ends. I'm talking about Indian Standard Time for US markets. Operation, security, trade date, value date. Value dates are different. In India, we have T+1. In US, we have T+2. In Canada, we have T+3. Quantity of securities, counterparty price. Validation, what you need to see is a lot of things. What are the transaction types? Which are the equities? Which are the trades? Are they permissible? Are they not restricted? Are they not stopped? Are they under upper circuit, lower circuit, suspended? Surveillance. There can be stocks under surveillance. When you trade, message comes. These stocks are under surveillance. Very interesting, fascinating facts. Here you can see. When you validate the trade as an investment banker, the first and the foremost is it should be for a new trade. Validation has to be, yes, it's a trade that has happened and I'm validating it. It cannot be for the future. How can a future trade be validated? It can be recent past or present. Yes, it can be recent past. Chalega. Tuesday, you can validate the trade of Monday and you can check the trade of Tuesday. Recent past or present. It cannot be of Wednesday. How can I validate a trade on Tuesday for Wednesday? Not possible. Future trades cannot be validated. So remember this. Trade has to be new. Trade has to be recent past. Trade can be recent present or present. Trade cannot be a future. You can't validate a future trade. It should be on a business day, Monday to Friday, and not on weekend. Saturday, Sunday trade, how can you validate? It cannot be validated on public holiday, 26th May. I cannot validate US trades. It's a war memorial day. They have holiday. 4th July, America's Independence Day. 15th August, 26th January, 2nd October, India's national holidays. So please remember this. You must have a calendar data for validating the trade. And of course, it cannot be after value date. What is value date? If I trade on 5th of June in India and 6th of June is my value date, T plus 1, trade date cannot be 7th June. How can trade date be after? Trade date comes before, value date comes after. T plus 1 is value date. T is trade date. Plus 1 is value date. So please summarize your validation. It has to be for a new trade. It can be recent past, it can be present, it cannot be future. It has to be on business days, it cannot be weekend, it has to be business hours, and trade date has to be before value date. Taking it further, obviously, trade time cannot be a future. Here it is just giving you a brief idea. India is T plus 1, US is T plus 2, Canada is T plus 3. Taking it further, when you talk about settlement, it has to be between the two parties, and validation components should be very clear that things are mentioned properly, enrichment is done, validation is done. These are some components. Naturally, if I am trading on bond, I cannot trade on the bonds which have already matured, whose dates have already gone. How can I trade in them? Shares, equity, common shares, ordinary shares, all these things we must see. Price must be mentioned, counterparty details must be mentioned, validation factors, accrued interest. Accrued interest, please remember, is a concept in Europe and India. There is a concept in money market. You can go through our masterclass there, explaining you for dirty price and clean price. It's a very important concept in fixed income securities and money market. It's there in combined topic. Please go through that masterclass. Trade validation can be obviously manual, where it is not possible to do automated trade validation. And here it goes. Components, when you validate, it minimizes the human errors. When they minimize human errors, they reduce operational risk, they reduce the cost. It's very important. Straight through processing is STP. When we do trade validation, it is equally important that the checks are done properly. Compliance is followed. I move to the third step of back office, trade verification. I again take you further. When I talk about middle office, it is trade enrichment, trade validation, and trade verification. Verification is a very simple step where you verify client's mail, what you have sent with the mail you have received from exchange. Okay, what trade has taken place? Client has sold 10 Google. Has Nasdaq confirmed? Yes, then it matches at that particular price. So you are verifying the trade. It's a procedure from client trade capture in front office to trade verification middle office. You can say two last steps ka matching. How? Front office, trade initiation, trade execution, trade capture. Trade capture is getting matched with trade enrichment, trade validation, trade verification. You are verifying now. What mail you send to client, you are matching with the mail you received from the exchange. Verification is the last step in middle office. Let's summarize middle office. Trade enrichment, trade validation, trade verification. Here comes the back office, where you have 4 more steps. Trade confirmation and trade settlement clears everything. But if there are problems, you go to reconciliation. If there are promoter involvement, you go to regulatory reporting. First, let's understand trade confirmation and trade settlement. After that, we'll understand trade reconciliation and trade regulatory reporting. Here you go there with trade confirmation. Trade confirmation means it's a formal statement of the terms of transaction issued by STO to its counterparty, whether institutional client or another STO. When you do it, you can do it through Excel, PDF, electronic platforms like Omegle, MarketWire. These are various options you have. Very, very important. What you will send the information, you will send all this information: name, relevant party, buying, selling, execution, how it is done, and the price. Very important. When you send, it is outgoing. When you receive, it is incoming. There can be outgoing trade confirmation to counterparty. There can be incoming trade confirmation from counterparty. When you send out, it is outgoing trade confirmation. When you receive, it is incoming trade confirmation. Very nicely put up in these slides. Naturally, these checks allow you not to make any mistake, and internal records are updated. Internal control is maintained. This must. Now, what is trade settlement? Once you have confirmed that the trade has happened, naturally client will ask. If he is a buyer, he will ask for shares. If he is a seller, he will ask for money. When will he get money? Trade date plus the cycle. In India, T+1. US, T+2. Canada, T+3. Let's assume I sold shares on Monday. So I will get settlement on, that is money on, Tuesday in India, Wednesday in US, and Thursday in Canada. T+1, T+2, T+3. If I buy shares, I will get shares in my account on Tuesday, Monday if I buy, Tuesday I get in India, Wednesday in US, Thursday in Canada. T+1, T+2, T+3. Again I repeat, India T+1, United States T+2, Canada T+3. And I'll tell you, remember these terms very simple. When you sell shares on trade date, you give it to your broker. It is called pay in. When you buy shares, you give funds to your broker. On trade date, it is pay in. When as a buyer, you receive shares in your account, in Demat account on the next day, it is called payout in India. And when you receive money as a seller on the next day, it is payout. So basically, it is pay in to pay out, trade confirmation and trade settlement. Here you know this now, T+1, T+2, T+3. T is the transaction date, trading date, and plus is the various settlement dates. But if everything is not okay, client says, oh, I did not receive my Google properly, my Tata Steel properly, then there is a escalation. Escalation goes to the exchange. And there will have to be matching of records for accounting trades. That process is called reconciliation. Trade reconciliation, we will do depot reconciliation, which will be learning in the subsequent master classes, where securities are mismatched. It's called depot break. We'll learn that. And if money is not received properly, it's called nostro break. So either it's a depot break or it is nostro break. So let's do that, understand the reconciliation. Reconciliation means matching of two records between investment bank and custodian. If securities are not matching, we will match them. That's a depot reconciliation. And if money received is not proper, it is called nostro reconciliation. So reconciliation was the third step. Here comes a very important and the last step in back office, transaction and regulatory reporting. Kumar Mangalam Birla buying 1 crore 86 lakh shares personally in Vodafone Idea, VI, and 30 lakh shares from alternative investment funds in family offices, 2 crore 16 lakh shares at 8 rupees, becomes a big news. Why? Transaction is only 16 crores. No, because he's a promoter. Please report to SEBI. In India, regulator of capital markets is SEBI. In United States, it is Securities Exchange Commission. In England, UK, it is FCA, Financial Conduct Authority. Please report if Elon Musk sells anything in Tesla or buys anything in Tesla. It's a regulatory reporting. He's a promoter. So please remember this. When Kumar Mangalam Birla does this, it is officially a transaction which has to be reported to regulators. So that step is called transaction and regulatory reporting. Regulatory environment, why do we require regulators? Gives investors confidence. Investors are protected. Interest of members, that is brokers, are protected. And reputation of the marketplace is protected. This is goodwill. Okay, yes, there are laws and they work. So basically, transaction reporting is basically the transactions which are done, which are reported. Transaction reporting methods are there. There is different regulatory. In UK, it's SETS. You can see here, tracks ISMA for monetary transactions. Here you can see in UK, the transactions you can see is CREST. This we will see in one chart. I'll just show you. Here it comes. When you deal in equities, you deal on London Stock Exchange in UK, you report to a CREST. And then they refer to FCA and Financial Conduct Authority, who come above Financial Service Authority. And then there is Eurobonds, that is bond market, you report to ISMA. And ISMA reports to TRAX. So basically there are two portals where they work in reporting is CREST and TRAX. CREST and TRAX, just for knowledge purpose. How is reporting done? These reporting are done by exchange when they are informed that the promoters have taken such and such steps. And please remember, higher the level of transparency is very good for markets. All these things have to be reported: trade time, operation, security, date, value date, trade date, value date, quantity, price, and counterparty. This is general. If any market manipulations are found, insider trading is found, significant errors are found, naturally actions will be taken. And when will action be taken? After detection. Directly, you have to prove that. You can't be biased. Action, I want to take action. I want to work. No, not that. You can't be biased. High Court reprimanded. High Court reprimanded SEBI. High Court reprimanded RBI. Why did you arrest Chanda Kochar? It was an action with malice. Was it personal animosity? All this is not allowed. Please remember this. There should be high level of transparency. And this is where we end our discussion. To summarize, front office, trade initiation, trade execution, trade capture. Middle office, trade enrichment, trade validation, trade verification. Back office, trade confirmation, trade settlement, trade reconciliation, and trade regulatory reporting. Our next step will be review of all exchange trade life cycle steps. Thank you all very much.